Yeah, absolutely. So good job. We've had a couple of quizzes. We've had two
Right.
winners. We've had great education. And man, we are just getting started. Who do we have up next?
Well, I am excited about our next guest, Michelle Schneider, my gal pal, Mish, very dear to my heart, is a powerhouse. She is Director of Trading Education and Research for Market Gauge, also an author of the best-selling wealth book, Plant Your Money Tree. She spent 13 years as one of the only female independent traders on the New York Commodity Exchange in the World Trade Center. So
Wow.
you're going to be excited to hear what she's going to share today. She writes a daily financial blog, runs a discretionary trading service. She's a constant guest on numerous financial media stations. So I'm really pleased that she agreed to come here today. So on how to grow your wealth in your free time. I don't know who has free time. The first thing you're going to explain this. But using consumer instinct to build wealth in the market, it's just going to be a fascinating, simple technique for staying on the right side of the market, steady process for finding and executing trading ideas. My dear Mish, are you online and ready to queue up?
I am. I'm just looking what happened to my little share screen here. Hold on.
All right.
All right, share screen. And by the way, Pat, so nice to see you, Nikki, Raleigh, and thank you for that beautiful introduction. Thank you so much.
Well, we're
All right.
delighted to have you here with us, Michelle.
Thanks. So, yeah, free time. I know, right, Pat, who has free time? But I think we're going to look at it in perspective in terms of sitting in front of the computer all day, like some of us, namely myself, do, so that all of you don't have to. And that's really the bottom line. So what I wanted to do, first of all, is welcome everybody. And again, thanks you all for that wonderful introduction and for actually inviting me to do this today. My goal is to actually get you to the point, and I want to get rid of this taskbar. I don't know why I am not getting, there it goes. Okay, good. What I want to do is really a threefold type of a presentation for you. And so why is this critical right now? Well, we're in an environment, in case anybody hasn't noticed, living under a rock, which, by the way, I would be envious of, is that if you wait till you feel it's safe, then you wouldn't be trading, and there's been tremendous amounts of opportunity. Secondly, you must learn to make market uncertainty and volatility your friend. As a floor trader, which Pat had mentioned, and I'll talk more about that a little bit later on, volatility was our friend. When a market would get crazy, when I say a market, a particular commodity, everybody would flood over to that and only add to the liquidity and add to the volatility, and that's really when you met the most amount of money. And also, find sometimes when it feels bad, well, we're really going to talk about taking the feeling out of it, but sometimes those turn out to be some of my best trades. And also, when something is going completely parabolic, that's always a good time to take profits and start to really reduce your risk exposure. And also, when you cannot trust the trend, and my God, we've seen that over the last 4 years, sometimes that has been the best place to buy. So these are all going to be things that we're going to talk about today under the umbrella of consumer instinct. But what I want to do is I want to cover really basically one of the things that I think most people have struggles with, and that is, what do I buy? How do I make a selection? Certainly if you're privy to the news or Twitter or any of the just volumes of information overload, it could be daunting. This is the best trade. That's the best trade. Amazon's going here, etc. Peloton, do this, do that, do that. So what I have found about women in particular, but all people, by the way, is that we all tend to have a consumer instinct. Just something simple like going into a store, let's say, or seeing a particular product and saying, you know what, I think this is going to be really hot. And for a lot of people, that thought ends right there. For me, I check charts immediately. So really what I want to do is kind of reinforce that we all have these instincts and also give you some megatrends that are another place for you to choose what type of stocks to be looking at or trends to be looking at. But I want to give you a way to time your way in at these sort of inflection points, and that's going to be market phases. And then what I'm doing really for the first time for Women in Wealth today is introducing you today to our momentum indicator, that market gauge proprietary indicator called real motion, because what you cannot see, you could see price, but you can't see momentum. And now we have a way to do that. And when you put this all together, you really have a wonderful way to put on some fabulous swing trades. I'm not going to go through this. This is just the disclaimer legally that you could lose all your money trading. This is for educational purposes only, yada, yada, yada. Okay, so who here would like to be able to identify the best trends to trust for trades that can last for months, right? That's something that certainly most people would want to be able to do. Who would like to be able to identify the exact day to expect a big intraday move? And who would like to be able to pinpoint when a trend will reverse for weeks or longer? And I'd say that's probably my specialty, is finding trends that are about to reverse. Had they been down for a long period of time and now are ready to go up, or vice versa, are topping out and now pretty much are exhausted and ready to move much lower. What happens when you wait too long because you don't feel comfortable until you see the trends or charts are safe? And that is really what we're going to try to deal with today. So everyone, as I said, has a consumer instinct. It can be used to build stock wealth in the market. And here's a perfect example. When 2007 came around and all of a sudden you started to see the black headsets that everybody wore. Now all of a sudden there were the white ones. And Apple was really introduced on the scene. And what's so amazing when you look at it, it was trading down at around $10, $15 a stock, a share, excuse me. But what I did at that point was think to myself, you know, this Apple thing sounds really good. And more and more and more I'm seeing people with these white headsets, and Apple looks like it could be really good. So what we're going to talk about when you see these two lines here, which are moving averages, is how you could have capitalized on that consumer instinct. And of course, we don't buy and hold here. This is not, I've had bought Apple at 10, I'd probably still be in it. Apple has been trading well up and down for years now, since 2007 when it first came out. And obviously when a whole market crashes like it did here in 2008, it gave you a new buy opportunity when the market started to stabilize. So this is what we say, we're not in the storage business, we're in the moving business. And here's another one. What about Amazon? Again, I remember going to gatherings with older people. I live in Santa Fe, New Mexico, where there is a lot of older people. And all of a sudden, I'd be hearing these people say, you know, I buy everything now on Amazon. I used to go to Target. I used to go to here. I used to go to there. But now I buy everything on Amazon. And that also was a great clue that Amazon was a stock to keep an eye on. Again, that sort of consumer instinct, keeping your ear to the ground. And Amazon really did not have a profitable quarter until we got into right at the beginning of 2015, had that gap, and then really has never looked back since. So again, another way to just be able to say, here's my idea based on what I see in consumer trends. And now let's figure out how to time our way into it. I also want to give you other ways to be thinking about ideas for trades, because this is what I do all the time. So climate change and alternative energy. Anybody who's been paying attention knows that that not only is a megatrend, whether you politically believe it or not, it completely doesn't matter. In fact, any political bias you have, put it on the shelf. And just look at the fact that TAN has been, TAN being the ETF for alternative energy, but also Solar Edge, First Solar, all the stocks in this area have done absolutely amazing. And partly is because of the megatrend that we're in, and partly it has to do with technology too. Geopolitical turmoil and disorder. Well, we've seen glimpses of it, but there are definitely something that we could keep our eyes open for, and what opportunities would come out of that, not just from the long side, but even from the short side. Obviously, social media, and even though we've seen explosive moves in, say, Facebook, and also Twitter was finally starting to come out of a long base. There are always new social media platforms being expanded. And of course, right now, the big buzz is on TikTok. I'd be keeping my eyes on that to see what happens. Again, some of these mega trends are old, but there's always new opportunities, like with online shopping or e-commerce. For example, you could take a look at so many stocks, some of which have gone crazy already, others that are still looking pretty good if the market holds up. And then I like to see the Gen Z, particularly more than the millennial, what their social and consumer trends are. For example, here's a perfect example. This week, Justin Bieber said that he was going to work with Crocs, those shoes. And the Crocs stock went crazy as a result. So I like to see what's going on with the Gen Zs. I talk to them all the time. Obviously, socially conscious investing is something that's big on their mind. So that will be where I would go as well. Video gaming, smart TVs, 3D printing, by the way, I've been watching 3D printing forever. It took a big dive actually because it's not really available to the retail space. But right now, in the last couple of days, 3D printing, which is 3D systems, which is really the granddaddy of 3D printing, just had an explosive move higher, getting a lot of interest from its lows. So I still think that this is in infancy. We may see video gaming is already in its senior days of megatrends. This is still in diapers. Same with cannabis. Cannabis, of course, has been killed over the course of the last couple of years because of the legal situation. But I would keep my eye on this very carefully, especially the election results could really be a factor here. And alternative currency being another one. I am very long-term bullish in Bitcoin. The problem is that it's not necessarily mainstream way to trade it yet, and that's a big problem. And of course, AI. But not AI so much in the old school ones. I'm looking constantly at these new companies that are doing artificial intelligence, some of the new issues that have come out even. Some of these always offer great opportunities. So you add that with your consumer instinct, you've got a stockpile of places to actually get information for what you might want to trade. And of course, you just need to know how to profit. So now let me just give you a little bit of background on me. My name is Michelle Schneider. I'm known in the business as Mish. I have 4 decades. As Pat had mentioned, I spent years on the commodities trading floor in New York. As a commodities trader, there were very few women down there, and actually the floor is gone now. But even to the last breath of the floor, there was always very few women there. And it wasn't because it was discrimination per se. It was just a very physically taxing place to work because you stood on your feet all day, you stood in a pit, and you tried to do open outcry amongst many men, sometimes 50 men standing there next to you. But I loved it. I was an athlete, so I was physically able to deal with it. But more importantly, I decided that I would stand out of the pit a lot, and I would actually chart. And I learned how to chart, and that's really where I became a master chartist. And many of the guys, and my contemporaries, by the way, Paul Tudor Jones, Mark Fisher, they would come up to me and say, "Hey, Mish, what do you see on the charts?" And I did an analyst for large commodity firms until I became an independent broker. I did write a book called Plant Your Money Tree, as Pat had mentioned to you. That actually became the best new wealth book by bookauthority.com. It was a bestseller on Netflix as well. And I have won awards for my trade picking. And really, basically, based on what I just told you, my own consumer instinct and seeing trends. That's just a picture of my book. In case you guys want to do it, we're actually doing a big promotion on the book here. It's been coming up, and I think it's going to be like a 99-cent special on Kindle. Now, how did I train my consumer instinct? Because when I went down to the floor, I knew nothing about trading. I was very lucky to get a job down there, and it's a long story I won't get into. But I had to learn how to trust my instincts even within the commodity that I was trading. And then I had to learn how to time my way in. And so I became, as I said, a chartist using point and figure charts back in the day. We didn't have any computers available to us on the floor. We didn't have news feeds. All we had was price. Price, intuition, and the 5 senses that we could actually see something emerging in momentum and volatility because the noise would pick up and the activity would pick up. So what I had to do off the floor is come up with what I call a compass, or a way of understanding these market phases. It's a really simple, easy way to get started as a trader, or if you're already a trader, to really perfect your game. The simpler you keep it, really, the better it is. So there is one of the awards I've won for trading. You can see I've had many hairstyles through the years. And this is I'm going to get into this later, but Real Vision is something I go on about 3 or 4 times a year. And I thought this was amazing. I gave them a trade. It doubled within a very short period of time. And they get some pretty lofty people on. And they called me up and they said, guess what, Mish? You won the award for the best trade of the year. And so that's me with the little plastic statue they gave me. And then I just wanted to show you the floor days because this is really what molded me. And it's relevant because I learned to be a macro thinker as a result of all those years on the floor. Because even though I was trading oil, and you can see me right here in the middle of the pit, all the guys right here, that's me with my point and figure charts. It really actually, as I said, is where I cut my teeth. And I learned not only how to follow the trend or see when a trend is reversing, but I really learned about risk reward because I, at the time, was not a very rich person. I was a school teacher before I went down to the floor. I had no money. I borrowed money. I could not afford to lose money. So I had to learn that if I were going to take a loss, it was going to be small. And if I was going to make money, I had to let that profit run. So I just wanted to show you a list of some of my media appearances. I've been all over the place. This one was my most recent one I'm very proud of because I was actually on a panel with Peter Schiff. That was interesting. But yes, the reason why I'm on the media a lot is very simple because as a trader, I can also pick trades and find trends and trade them. But I have a big macro view. I see the relationships among all of the different sectors and the indices. I've created what I call an economic modern family. So I'm called upon to talk about the overall market, the sector rotation, what's happening, what trends are emerging. And the biggest thing I've been known for lately is my call since January on stagflation, which is starting to happen. Okay, let's get into it now. So these are the phases right here. We have 6 of them. So let's go into them. Let me show you this really quickly because we're going to actually go back to this. We're going to show you a different picture of this, but it's really very, very nice to watch because it actually is cyclical. That doesn't mean it has to follow in cycles. We don't necessarily always go bullish, caution, distribution, bearish, recuperation, accumulation. But because it follows basically the emotional cycles as well of the market, it works really, really well. And so once you have something you want to look at because you have an instinct about it, this becomes your navigation system, and we'll go into it more. So basically, what makes phases so great is if you're a longer-term trader, you can do a trade that will last days to years potentially. And I said I don't like to do buy and hold, but if you're making money and you keep a tail, there's no reason why you have to get out. Short-term swing traders can actually be able to catch the momentum before they even see the trend change, and that's where we're going to get into that real motion a little bit later. For option traders, it's great because if you know if something is changing a phase, then it gives you the strike price, it gives you an idea of the length of the trade, and then also your stop loss. And if you're a day trader, when something hits that inflection point, sometimes you get explosive moves that very, very same day. For an example, if you wanted to look at a chart, if you just put up U.S. steel today, X, perfect example. It crossed over a major moving average, and now it is actually up about 7 or 8% on the day. That would be an absolutely great day trade to catch. So now let's go more into the specifics here. So everybody knows what a bullish phase is, and everybody knows what a bearish phase is. What I really like is the ones in between. And as I mentioned, I attached an emotion because I think it's good to have the mindset of what the market participants are in. So obviously, when you're in a bullish phase, and especially an accelerated bullish phase, you get into a euphoric stage, and they call that irrational exuberance at times. And it doesn't mean it's necessarily a bad thing. It's just generally once you get to a certain level of euphoria, eventually that euphoria wears off, and you get into what we call a caution phase, and that's where some anxiety comes into the market. And the market lately, by the way, has gone from a little bit euphoric back to anxiety, a little bit euphoric back to anxiety. And we've even been recently more into a fearful stage, although we've come out of that, and that was a distribution phase. And then if things really go from bad to worse, then we go into a bearish phase, and that's when everybody's in a state of despair. However, what makes the human race and the markets so wonderful is that we have an incredible quality called hope. Hope is one of our greatest friends as human beings. And so as hope, it gets reflected in the market and we go into a recuperation phase. This is my favorite phase to trade, by the way. And then if things continue to go well, we go into an accumulation phase. That's where optimism returns, and then back into bullish phase and euphoria. What's great about these phases is sometimes you see them go all cyclical like this, but generally what you'll see is bullish, cautious, bullish, caution, bullish, caution. And that tells you that either A, we're ready to make some kind of bigger move. Either it's going to go back into bullish and explode to the upside, or that caution phase and that anxiety is warranted and we're going to go into that distribution phase, fear. So it's really good to see when we go up and down, up and down, up and down on these phases, get ready for something to happen after that. Now, what we do to determine the phases is very, very simple. Two simple moving averages. I like to use the 50 and the 200-day moving average. In my book, I go 50 and 200 week moving average. It's the same principles, but I like to layer a daily chart with a weekly chart using those same 6 phases, because sometimes that stepping back gives you a little bit of a better bird's eye view. And what we look at with these two simple moving averages is where the 50 is relative to the 200-day moving average. Is it above it or is it below it? Simple. And then the final thing that I look at is the slope of the moving averages, which really is somewhat of an invisible measure of momentum, not as good as the real motion I'm going to show you, but at least it tells you that if something is trending up and the slope on the 50 and the slope on the 200 go from, let's say, neutral to start pointing up, you can pretty much guess that the momentum is increasing in that particular trade. And that's a good thing if you're on the right side of it. Same thing, obviously, if the things start to slow down or slope down, then momentum is starting to decline or momentum is increasing to the downside. So here is an example of the bullish phase. As I said, clean, simple charts. The blue is the 50-day moving average. The green is the 200-day moving average. This is the S&P, just at no particular time, just to show you. Actually, it does say here 2013, so it's back in time. But really, basically, what happens in a bullish phase is that the 50 has to be above the 200. That's number one rule for a bullish phase. In order for it to be a really good phase, the slope has to be positive. So you can see here how the slope started to go up on both the 50 and the 200. And by the way, the slope on the 50 is going to go up faster than the slope on the 200. Why? Think about a train conductor. If he's pulling 50 cars, he's going to get to speed much faster than if he's pulling 200 cars. But on the same token, if that train conductor has to brake for any reason, the 50 cars are going to brake faster than the 200 cars, which sometimes you'll see these little blips, let's say in slope on the 50, while the 200 still rockets up in slope. That's why I like to use these two, 50-day being, really basically about 2 months, this being almost about a year. So it gives you excuse me, this is about 4 months. The 50 week is about a year and the 200 week is about 4 years. So that's kind of like why I like to do both. And then what you want to see after that is price. The price has to be above both of those moving averages in order for this to be a bona fide bullish phase. So in other words, if you are looking at a bullish phase and that's your 50 and that's your 200 and your price is right here, that's a really good opportunity because that's when you're going to get your lowest risk. If you're looking at something that you like and you see the prices up here, what does this tell you? It may tell you that the stock looks great, but you have a tremendous amount of risk because there is such a thing as law of attraction. And very often, if you see any kind of a correction in the market, you're going to see that price fall back down to the 50 very quickly. That's too much risk. So if I see something up here, I go, oh, I missed it. I'll have to either wait for it to correct or move on to find something else. So really, what is the best time to trade is at the start of the phase change. So if we just want to look right here, for example, when this had a slope up on the 200, slight dip down, but started to slope up here on the 50, right here on this gap day would have been a good day to enter, even this day in anticipation. And look, you had a tremendous move up. Now, I'm not going to cover so much the in-between phases except when I start to show you when we talk about some examples, but I do want to show you the bearish phase, the opposite. In this case, the 50 is below the 200. The slope on both of the moving averages are going to be negative. Again, the 50 is going to go negative before the 200 does. The price has to be below both the 50 and the 200s. And the best time to trade it, obviously, is when the price is closest to the two moving averages. I love to show this example of 2008 because this is absolutely classic. And by the way, we also had a great classic example when we had the COVID swoon back in February, very similar type of scenario. But here, back in 2007, everything was still very bullish. We had, when the 50 first crosses below the 200, we call that a death cross. The opposite is when the 50 crosses back above, like we can see it was starting to happen here, the 200, we call that a golden cross. But in this situation right here, look at this. Everything was perfect. You still had the slope somewhat neutral in the 200. It was starting to point down in the 50. The price was sitting right on both moving averages, and it was really the start of the big crash that we had in 2008. At this point, we called all of our friends and our family and told them to get out of the market, and at that point go to cash. And nothing really was safe at that particular time, so it was a really good call. At the same time, in 2009, right down here, when we went into what this is called the recuperation phase, it was the same time that I told people, and so did Market Gauge, that the market was bottoming and it was safe to get back into the water. So this is really where these phases work out great. They're a compass. You never get lost. So now what you really want to do is you want to have the experience of finding it right at the phase change, because that's when it's most explosive. So if we're looking here at this gold chart, by the way, you can see that gold during this period of time, and this was 2015, had been in a bearish phase. Even though it crossed back over the 50 here in a recuperation phase, look at the slope. It was a weak recuperation phase. It got a little bit better here, crossed over the 200, but again, the slope was down. And so it crashed once again. It wasn't until here when the slope started to go positive and it went into a recuperation phase. Not only did you have a good trade here, but even if you didn't trust it, if you waited to here when the slope started to neutralize on this first day here at 108.50, once it cleared that 200, you immediately, in just a few days later, by the way, we're not talking about a lot of time, 1, 2, 3, 4, 5, 6, 7, 7 days later, you went from 109, let's say, to 121. That's a nice move to catch. And all you had to know was the phase change, the slopes, and the price with, by the way, the least amount of risk, because look, you could have just risked to under the low of that day, which was about 108. So you could have risked maybe $1 to make $12. That's a good risk. I'll take that all day long. Okay, so here's another thing. This is IYT, by the way. This is the transportation sector. I'm not going to get into all of why I think that's so important because we don't really have time. But nonetheless, I like to watch this. And sometimes what you want to do is when something happens after a period of compression, retraces and reverses. So this is the classic example right here. Well, we have two examples here. First of all, we have it from the short side. So again, if you look at this, this is already, when this is under the 200, the 50 is under the 200, and the price is under the 200, this is what we call a caution phase. And then when it breaks down under the 50, then we go into a bearish phase. And actually, in this case, you can see here, after it took all this compression out and broke down right here, it was a great move down. The opposite is true here. After all this compression, all you needed to do was wait for a second day phase change back up to a recuperation, and then you know either A, it was time to cover your shorts if you weren't sure, or B, reverse position and go long. So here's just a couple of examples. This is Allegheny Technologies. Here's another picture of that sort of compression with a move underneath. Here's your death cross back here. So at this point now, I probably wouldn't have shorted, or if I would have, had to have a wide stop here. I prefer to wait when things are closer to the moving averages. And so you had that classic opportunity, not once, but twice, but 3 times it touched the 200, couldn't make it. Then it broke below all this compression and boom, you had this big move down. And look how nice that worked. By the way, this magenta line here, that's the 10-day moving average. But then again, look what happened. Moved back up, cleared the 50-day moving average. This is why I like this recuperation phase. People are still negative, or they're not in the trade, or the short float's high. We get in. By the time it gets up to the next moving average, we're already taking profits in case it stops there. Now, this is another one, EHTH, by the way. This it had also gone on Real Vision and talked about at the time. And this was something I was interested in, talk about consumer instinct. And by the way, Allegheny Technology was a consumer instinct as well, and gold as well, because I've been looking at the dollar dropping and the rates being so low. I didn't mention that before. Allegheny was, at that point, technology was looking a little long in the tooth and heavy in 2015 and was one of the first sectors to take a correction. This came to me because at the time, this was really going on after Obamacare had been passed. There were a bunch of sites that were coming up, but this was really the best one in terms of where you could shop online for healthcare. And then Medicare it added a Medicare component to it, and I thought, wow, this is really interesting, because if you try to shop for Medicare, it's very confusing. If you try to shop for most health plans, it can be very confusing. This basically sorts everything out for you. You put in all the parameters of what you're interested in, and then it spits out to you suggested healthcare plans with prices, etc. And they make their money not from you. They make their money from the actual insurance companies, and they represent a whole bunch of them. So I knew that. And I went on Real Vision and I talked about that. And so I was just waiting for an opportunity with the phase to change. And again, when I first started looking at it, it was getting too far away from the 50, so I waited. And look what happened here. Not only did it keep touching the 50, but it was really showing me that even on the days when it tried to break it, it actually was holding pretty well. I went on Real Vision in October, mentioned to buy it at 26 on the confirmed phase change. And I have to say, this stock peaked out at around $115, and we actually kept this stock for a long period of time, even though it broke the 50 a couple of times. We had already had such big money in it, and we had taken some profit. We kept the tail until it finally broke hard here back in September of that particular year. So this is, again, I mean, you're not seeing a lot on my screen. And of course, we do use other factors, but just a simple phase change sometimes really is amazing, especially if you couple it with something that you're researching, or that you just have an instinct on, or you can see a consumer trend, or it's in a megatrend. So when you really get good at reading the phases, you can find the ideas easily. You could double check the idea with the phases, and then you can scan the market to find stocks and ETFs also that are good phases if you can't think of anything. Just look to see what phase it's in. Simple. If it's over the 50, over the 200, and the 50's over the 200, and the slope is good, then you know it's a bullish phase. Okay, and this is what I basically do every day. I'm constantly scanning for phase changes. Okay, so here is a Disney. I just want to give you a couple of examples of how this worked before we get into real motion. So at the time, I got interested in Disney because I knew that they were going to start their streaming service. Again, just hear information. I liked it. I figured, I also, by the way, am a big Marvel comic book fan, some of those series. I heard that they were going to start streaming that, and so I got interested in it. But I watched a lot of volatility before I decided to get in. And when I saw that the 50 and the 200 were sort of sitting right on top of one another, I waited for this 50 to start moving up, and I now had a really good risk to underneath these lows right here, and we bought the stock at $113, and then boom, it just gapped up. This was an earnings gap. We held it because we had a nice cushion, and of course we're not in this trade anymore, but I just wanted to show you how well putting those two things together worked. And Beyond Meat, again, I've gone on many programs to talk about Beyond Meat. Of course, Beyond right now is trading up at here, and it's been all over the map. But this was another thing, because I knew that once plant-based burgers came out, and I started to see people who don't ever get anything but a hamburger start ordering a Beyond Burger, I thought, okay, this is really interesting here. Now, what you don't see here is the moving averages, but the moving averages now have come back in. I use this trend line as sort of my 50-day moving average. And so when it broke out here at $78 is when I went on, again, Real Vision, my muse, to recommend the stock. Now, if you looked at Beyond Meat now, given where it's trading right now at $185, $190, you'll see, if you look at a chart, at September, just a month or so ago, it had tested below the 50, crossed back over the 50, back into a bullish phase, had such a tight risk at around 132, and look at the move you got. You got like a $55 move from there. So even though you're not seeing it reflected on this chart, it definitely is something to look at. And I just wanted to show you one when it's time not to stick around. Again, consumer instinct. People start sending me files on Dropbox. If I want to send a bunch of pictures that said that I had to use Dropbox to do it, I thought, okay, onto something with this Dropbox. So look what happened here. I didn't wait for it to clear the 200. I bought it when it cleared the 50-day moving average. I entered at 22.14, right around this day right here, and I put my risk under here. And so I actually got a first profit target. I use a risk to reward ratios. I don't want to get into a trade unless I think I can get 2 to 1. I'd rather get 4 to 1, 5 to 1, 8 to 1. In some cases, we've done that. But at least I want to see my way to 2 to 1. And at 1 to 1, sometimes I'll go to a no loss stop. So here I got my 2 to 1 from where I risked, and I took some profit, and then look what happened. The thing sold off, so immediately we got out of the rest of it on a trailing stop at 22.74. I didn't like the way it acted, and of course, look what happened to this stock. It really got killed. Now, this is what I was starting to tell you about in the very beginning. This is the secret sauce right here. There is a trend other than price, and it moves the markets. It's momentum. And momentum often changes its trend before the price changes its trend. So can you imagine when this happens, a sudden price move soon follows. So imagine now knowing where to look for a stock, something you like, something you know. By the way, Peter Lynch was the big guy in Consumer Instinct. He said, buy what you know. He wrote a whole book on it. He was one of the most famous Magellan traders of all time. He's still alive, but not as active as he used to be. Imagine knowing what to buy, buying something you like, timing your way in with a phase, but also being able to look at the momentum. So what Market Gauge has done is created a way for you to see the momentum in a way a conventional charts do not allow you to see. I gave you a little kind of a glimpse with slope, but this is much more reliable, and we call it, look at this beautiful slide here, real motion. Okay, so what does real motion allow you to do? It allows you to see reversals before the price reverses. So the way I like to use it is if I'm following something that I like, now I'm going to show you some examples, and the momentum precedes the price in reversing, and I'm going to show you what that looks like, then I just wait for that phase change. So it gives me a heads up that the momentum is happening before the actual price. Then I just look for that confirmation of the phase change, and it's a really, really good way to increase your odds of doing a very good trade. It also confirms the support or resistance on the prices you're going to be able to see, and what you cannot see on a chart is support and resistance of momentum, and now you actually can. So here's an example using Apple. With real motion, by the way, what we use is the exact same moving averages. I mean, my job in life is to try to make trading as simple as possible for people, number one. And for number two, also to be able to go on TV and explain how simple it is. So I might say, well, the momentum divergences are showing that this could actually really go up. And that's exactly what this is doing right here. This is the 50 and this is the 200. These are moving averages based on momentum. So you can see right here that the 50 crossed over the 200 at the same exact time. This was trading well under the 50 and the 200 in Apple. So all you had to do is say, all right, I'm keeping my eye on Apple. I'm not just going to buy it because that's dangerous. And what's your risk if you're wrong? What I'm going to do is I'm going to wait now for the phase to change. So you can see how nice that works right here. This actually, once it cleared back over the 50-day moving average, here you had your momentum. It went up and down a little bit along, but it gave you the clue here that momentum was shifting. It confirmed here once again. It confirmed on the phase change, and whammo, you had that gap up the next day. Okay, I'm asleep. I missed that one. You know, I was, I don't know, out that day or whatever. I wasn't feeling well or whatever it was, or the market was going berserk. You have another opportunity right here. Now, this real motion indicator, look at that. This 50-day moving average is showing you that the momentum is increasing. So similar to what I just showed you with the strength of the phase. You get a retracement down to the 200. Another great opportunity with a tight risk to get long, because the momentum is showing you that even though the price is correcting, the momentum is still good, and whammo, there she goes. Tesla. Okay, Tesla is another one. Tesla has been absolutely explosive, and what we're going to do with Tesla here is the same thing. Is we can see here that the 50, this has some Bollinger Bands added, but let's just focus on the 50 and the 200. Right here, when you had that golden cross, this was sitting on the 50, but it was still well under the 200. So you had two choices. You could have waited for this to confirm that it's holding the 50. You could have waited a little bit longer. You can see the momentum is starting to move up here for it to clear the 200. You would have gotten in before the gap. And of course, as we know, Tesla turned out to be a great trade. By the way, another consumer instinct, because we had just come from Vancouver and all you saw all over the road was Teslas. TAN, here's that solar ETF. Same kind of fabulous divergence. The 200 here was above the 50, but this was moving above the 200 in terms of price. And look at where the 200 was here. It was still well below. So you could have done one of two things. You could have bought it against the 50 saying this is probably going to catch up. You still had a good risk. Or you could have waited for it to clear the 200. And again, you had another incredible trade there. Same thing with Regeneron. Regeneron here, another example, was breaking the 200 on the momentum indicator. It was still well under the 200 at that point. All you had to do was wait for this to clear the 200, and again, another explosive move. So you can see I'm using the real motion for my divergence to find the momentum is increasing. It's giving me a heads up that the price could increase, but I don't just jump in. I wait for that other layer of the phase change. And now here's one I wanted to show you, because this is actually moving right now. This has been in divergence for a while. This cleared the 50 and the 200 on the real motion indicators. Look where it is. It's still sitting right above the 50-day moving average. It's actually trading a little bit higher as we speak. But this is the agricultural ETF, DBA. And this is showing you right now that the momentum here is telling you that this is probably based out and is going to go much, much higher. So the idea is keep it simple. Focus on the situations where there's an obvious difference between the momentum and the price. And then you could put it on a daily time frame if you want, using the 50 and the 200, or you can even look at it on a weekly time frame if you want to step back. So what if you could use my expertise for your own trading success? So when I say trade in your free time, this is all the work I do for you. So as I mentioned, I've been around for 40 years trading. Every day I help traders confidently identify big trend trades. I give them the opportunity to trade without worrying about the next big correction because of the risk reward parameters we use. We sort of price in for volatility in terms of our sell stops. And I've really been actually so pleased and so grateful that I've had this opportunity to help people build their wealth through trading, and especially women. I have a lot of women that work with me. So here's how I make the trading success possible for anyone who wants to become more self-sufficient with their trading. Is first of all, I send real-time alerts out. That's a $1,997 value right there. So if I'm going to get into a trade, you don't have to guess. I put it in an email the night before, which you're going to see, and then I send you out a text and an email that says, buy X at blah, 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 blah. Here's your sell stop. Here's your profit target. And then I monitor that trade through real-time alerts. So you get everything you need, the entry, the stop, the targets, and then I follow it up. So you get to manage your trades along with me like a pro. And if you're an options trader, you have an actual strike price that you can look at. Then I also at night, I give you daily analysis on top of the blog that I write. You get a list of the trades that we're watching, that we're in, and what I'm looking at the next day and what I think should happen in order for you to get into that trade. And then, of course, you get the alert if it actually does happen. Plus, I give you information on the ETFs that are the more cyclical and non-cyclical of the economy ETFs for you to monitor as well. Then twice a week, on Tuesday, I do a training video, but on Thursday, I do it live coaching, okay, $497 value. So you get to actually be in the session with me. So I get to answer your questions, but I go through the whole macro, the best trade setups. And again, I really go through how we're moving stops, why we're moving stops, and that modern family that I've mentioned to you before that represents the salient sectors of the economy, we go through that as well. Then you also get a scanner. This is yours every day. You get 2 scanners, one for long setups, one for short setups. And what this does, as you can see right here, is it tells you when something is changing phases by lighting up. So if you want to find your own trade ideas, then you can do that right here. And that's a $997 value right there. And then you get some other type of trading setups that I explain later on, but it lets you know whether things have made a new high, new low, whether the range has been expanded, and how many days it's been above, below the 10-day moving average, because sometimes people like to time their way in. On top of that, we also have a tremendous support. It's not just me. We have a couple of other people that are always talking to people. Mary being one of our main customer service people. She's always available. You can get on the phone. You can live chat. You can email. You can direct message me on my Twitter account. Most services do not have humans that you can talk to pretty much anytime you need to. And that's a $297 value. So we don't like to leave you alone. So you get your alerts for $19.97, the daily analysis $9.97, the 2 training sessions per week $4.97, the exclusive scanner $9.97, and the VIP support services comes to a value of $4,785. But just for today, as I said, I'm not kidding. This was the first time we've ever done this, where we are offering the real motion indicator as a bonus. It's a value of $1,994, as I just explained to you, that you can see using the moving averages. In this case, this is a shorter term one, but I like to use the 50 and the 200. You get a lifetime access to these indicators, lifetime training on how to trade with real motion indicators. You get a video every week that usually Keith Schneider, my husband and CEO, does with what stocks are actually setting up with real motion indicators. And what you need to have is a platform that's compatible. So here is the list of the platforms that are, I'm not going to go through now for time's sake, but yes, you definitely have to have a compatible platform for that, number one. And number two is you'll get a list of instructions on how to set it up on your particular platform. And also James, another person that works with us here, is always to offer support if you need it. So I just want to say, this is Roberta. She's been with me for a long time, and it's just so nice to get these type of testimonials. She said, I'm the real deal, and I just love for people to think that way, because I really try to be just a good person in all of this. I love helping people. I've been a teacher my whole life, and this is just another great way to teach, and very, very gratifying to see people make money from it. So if we add all of these things together, The value would be $6,782. We're offering it today for Women in Wealth at $997 if you go to marketgauge.com/WIW. We also have a bunch of other bonuses that I'm not going to go into now, but there are 3 fast action bonuses. They're $1,091 value. Again, we're throwing that in again for the $997. And this guy here, Rob Quinn, if you're confused and you want to actually talk to him, he can also help you not only navigate your way through the products that I'm just talking about with you, but also some of our other products. And his number is 407-770-7637. Again, marketgauge.com, WIW. And by the way, we only take 25 new members at a time because we give so much attention to people. I talk to people all day long. I really don't want anybody to join the service and feel lost. So we can't really accept more than that because it just gets too overwhelming. So there you go. Again, there's everything that you get for $997. And I'm going to just keep that on the screen. I'm done and ready for any kind of questions we might have.
Super, Mish, and I appreciate the special that you did for us. That was really generous. We did have a few questions pop up. One was curious, which is, do you prefer the 50 simple or exponential? Same with the 200. So which do you use?
Well, for the daily charts, I use the 50 and the 200. Only. I do throw a 10-day moving average in there too, mainly because sometimes when I'm looking for trailing stops, I might use that break of that 10-day moving average, which obviously is going to accelerate a lot faster using that same train theory, pulling only 10 cars than, let's say, the 50 or the 200. So for example, if I'm in a stock let's give you a good example. Tech was one that we just did, 2 profit targets, and we have a trailing stop in it. I'm using really basically the 10-day moving average and a little bit lower as my trailing stop. I do use exponential moving averages though on a weekly basis. I really like them on a weekly basis, especially since I like the 50 and the 200 week for the phase determination. But sometimes there's 2 exponentials that I like to use, a 17 and a 43-week moving average. And it just really gives you a little bit more of a finite way to time your stops and your entries. And especially if you're in something and it starts to correct, sometimes it'll hold that 17-week. And that means that I would put my stop, let's say, under that. So yeah, that's the only time I'm going for exponentials. Otherwise, I stick to the simples.
That you might be analyzing, like the MACD or Bollinger Bands, anything else that you suggest adding to?
I don't use MACDs, but I do use Bollinger Bands, but only on one time frame. I use them on a monthly time frame. And that's because the monthly Bollinger Bands are really great to determine resistance and support areas, number one. And sometimes if something clears a Bollinger Band and then breaks down below it, it's telling me that perhaps the trend is done. Or conversely, if it breaks below a Bollinger Band and the market's been selling off or that instrument's been selling off and it clears it, again, it might give me a good clue that the trend is now turning back up. But yeah, I try to keep it simple. I'm not kidding. I really, if you looked at my 4 screen charts, you would see I have 4 time frames. One would be a 30-minute. And all I have really are those moving averages, exponential moving averages, Bollinger Bands. I do use an RSI indicator. I do look at volume, and the real motion. I mean, that's really basically, what I've got also now as my newest layer in the last year or so that has really helped a lot.
I enjoyed a certain section in your books. I'm just going to bring it up, and people don't hate me, but I really mark through my books and dog ear them, enjoy them. But I like the section when you said finding opportunities when times are tough. And I specifically thought it was important that you said timing the bottom of a bear market is not your concern. So what is the opportunity that you're looking for right about in that time period?
Well, I like to look for things. Well, first of all, I like to look for things that have been beat up for a long time, right? If you talk to anybody who's worked with me for years and traded with me for years and you ask them what is Mish's specialty, that's really it. And it's because I look out and I can see how trends are changing. But that's just an idea in my head. So basically, something can be in a bear phase for a really long time, and I won't touch it, but I will watch it. So what I'd like to do is wait for that to change. So now you saw real motion indicator, the momentum can start changing, like in the case of DBA I just showed you, where everybody has been talking about deflation. I have been looking at inflation through a food-based inflation because I could see the momentum indicators in a long-term bearish phase in wheat, corn, soybeans, sugar. Now coffee's starting to move back up after being up and down, up and down. I could see the momentum indicators telling me momentum is changing. It's been beat up. Nobody was even interested in these food commodities. Once it changed phase into that recuperation where it cleared the 50, I'm in. I want you to know we have banked big gains in sugar, wheat, soybeans, and now DBA. We're in DBA as well as the one I showed you. We were already in it, and I showed you it's not even too late. So that's what I'm doing is I'm looking now at these macro trends, especially ones that have been not popular, and I'm waiting to get in using those indicators that I just showed you as my compass.
And that's one of the benefits of the membership is you have the trained eye. You start experiencing and spotting a shift before anybody else would. I am going to go ahead and put your follow-up screen on. I think we've wrapped up with all of the questions, but I just want to tell you again, thank you, thank you. I know you do a lot of online shows, and so I truly appreciate you coming on for us today.
Thank you so much, Pat, Nikki, Raleigh, excuse me. It was great to be here.
Yeah, so let me just reiterate everything with everyone. So Michelle Snyder's with Market Gauge, and she is offering her Market Minute premium service. So that's up to 5 weekly premium trade alerts, 2 weekly market training videos, daily market analysis emails on top of 10 trading ETFs. That is also at marketgauge.com/WIW. Our moderators are going to put that in chat as well.
They did. So,
yeah. And I can tell you when Mish says that they provide a lot of human support, they really are there for you. They have a genuine interest in helping you succeed. So I would tell you to check that out. I'm a big proponent of following my gal pal Mish. Thanks again.
Thank you. Mwah.
So we're going to move on. We like to keep this train on time. We don't have 50 cars pulling behind us, but it can get off the track real quickly. So we're going to go into quiz time. I'm going to get a little drink. And Nikki, can you do the quiz?
Oh, sure.
time?
Okay, get ready. We're going to ask a question, and the first person to answer will win a $100 Amazon gift card. And here we go. 3, 2, 1. Who is the only woman to win the Nobel Prize in economics?
All right. I will look for the moderators to give us that answer. Let's see. All right.
No winner yet.
I know. I'm going to have to hum the tune pretty soon. Somebody better answer or you're going to hear me sing. It's not pleasant.
It's not too bad, Mom.
All right. You could have Googled it by now. So let's see.
Still not seeing a winner.
No, nothing.
Oh, we have a winner.
I think we do. Okay. So Brooke Hamilton is the winner. Get with our guys. The answer is Eleanor Ostrom, 2009. I'm going to have to dust up on some of my women
History.
quiz time history.
Me too.
Yes. So Nikki?
And ladies, I need to chime in just for a minute because I thought this was apropos. Just today, 2 women won the Nobel Prize for chemistry. And, Emmanuelle Charpentier from France shared it with Jennifer Doudna from the U.S. And that just happened today. So once again, women in the news, women in wealth, women everywhere, making all kinds of great accomplishments. I wanted to share that with this particular quiz question.
Thanks,
Thank you,
Raleigh. I appreciate it. Nikki?
Nice to share that today.